Exercise 2.3 Instructions. Record the transactions relating to fixed deposits and loans in the opened accounts in the General Ledger of Park Merchants. Show all calculations. So what we're going to do, because there's a lot of information and detail in terms of the dates, I'm going to draw up a timeline just to help me to sort through this information and then help me to do the calculations a little bit easier later on. Transactions. Number 1. On March 1st, so right at the beginning of the year, we invest an amount of 50,000 on a fixed deposit at ENB at an interest rate of 10% per annum. So I'm going to write here it's 50,000. It's for a fixed deposit and it's at 10% per annum interest rate. Next, they say 30th of April, negotiate a loan with ABSA 20,000 at an interest rate of 15% per annum. So around about there, on the 30th of April. $20,000, and that's a loan. And just for interest sake, look at this. Fixed deposit, 10% per annum. Loan, 15% per annum. Remember, your loan is always going to cost you more than what a fixed deposit will bring in. The expense will always be greater than the income. Therefore, we always try to minimize our loans because the interest rate is high. June 1st. Receives a check from ENB for the first 3 months interest on our investment. Good. So now we're starting to earn money. So interest was paid, and that interest was paid for 3 months. Next, August 30th. We issue a check to ABSA for 4 months interest on the loan. So there, on the 30th of August, four months have passed and we need to pay interest. Then they say on the 1st of September we withdrew 20,000 from our fixed deposit. So that's just the day after. We withdrew 20,000 from our fixed deposit. Now you can already see that in the next bit, when we are calculating interest, from year to year we still had 50,000, and then after this point in time, from the 1st of September onwards, we only have 30,000 fixed deposit. So from that date is the 1st of June up to the 1st of September, that gives you a total of, let's count, June, July, August, then we don't count September, so that gives you 3 months which we still had 50,000 Rand in our investment. Then on October 1st, we paid an installment of 8,000 on the loan at ABSA Bank. So that's 1 month after. It's the 1st of October. We paid 8,000 on the loan. So again, from the 30th of August up to the 1st of October, that gives you September. That's only 1 month because October doesn't count. So that's 1 month that we will pay interest still on the higher amount of 20,000. After the 1st of October, we start to pay interest only on the 12,000 Rand. Then the 28th of February, 6 months, the end of the year. Receive the outstanding interest for the year on the fixed deposit. So we're going to receive interest, and interest will be paid. Remember, the remainder Last time we received interest was there on the 1st of June. So we're actually going to receive interest now for the full year. So the full year goes all the way from there up to the end of the year. But remember, some of this interest will be worked out or calculated on the higher amount and then afterwards on the lower amount. So the higher amount will be for 3 months, and then after that for the last 6 months we would pay interest, or we would receive interest on the lower amount, the 30,000 only. So just keep that in mind. We need to go and do that calculation now. Then they say the interest rate on the loan increased on the 1st of January. So on the 1st of January, our loan interest rate, instead of being 15%, they say it went up to 16%. So there was an increase in our interest rate. Issued a check for the remaining interest for the year. So again, the last time we paid interest was there on the 30th of August. Now we need to pay from here all the way to there. We need to pay interest, but 1 month will be on the 20,000 still, and then after that we work it out on the 12,000. But remember, the first one will be 12,000 on 15%, and then the last 2 months will be 12,000 on the 16%. So 12,000 on 15%, that would be for 3 months. It would be from October, November, December, that's 3 months. And then from January and February, that's 2 months, will be on the lowered amount. So it looks chaos, but it's going to help us with the calculations now. We'll refer back to that in a bit. So let's start by putting this information into our books. So firstly, we invest 50,000 Rand. Therefore, I'm creating a fixed deposit. Now, what will be, it's important for you to note, fixed deposit is an asset account. So in other words, when I'm creating by adding in the amount of 50,000. Now, what will be your contra account? So in other words, where is this 50,000 Rand coming from? And remember, it's extra money lying in my bank. So I'm taking it out of bank through the CPJ and moving it into fixed deposit. So bank will be my contra account. Next, negotiate a loan with Absa. So when I go to my loan account, again, I'm creating the loan account. This is now a liability that I'm creating. So in other words, I want to show that this liability now has 20,000 Rand in it. So when I put the 20,000 Rand in, where else did the 20,000 Rand go? Because remember, the loan was negotiated, and therefore afterwards the bank gave me the money for the loan. So where did the bank pay that money into? They paid it into my bank account, of course. Through the CRJ, I recorded the 20,000 Rand. Then on June 1st, we received a check for the first 3 months interest. So let's calculate the interest first. So my fixed deposit at the moment is on 50,000. My interest rate, they said, was 10%, so 10 over 100, and I'm only doing it for 3 of the 12 months, so 3 months. That gives me 1,250. Let's put that 1,250 into my account. Remember, it doesn't go to fixed deposit, it goes to interest on fixed deposit. Now, interest on fixed deposit is an owner's equity account, but it's an income, so therefore I can anticipate that it's going to have an entry on the increasing side of owner's equity. So I want to put that money into my interest on fixed deposit at 1,250. What will be my account that I'm going to debit with this 1,250? Remember, it's money that I'm earning, so I received it from the bank. Therefore, they put it into my bank account through the CRJ. On August 30th, we issued a check to ABSA for 4 months interest on the loan. So let's calculate that first. 4 months interest, my loan amount is 20,000. My interest rate is 15%, so I times it by 15%. And I only want to work it out for 4 months, so 4 over 12. That gives me 1,000 Rand interest on loan. So when I record that in my books, I'm not going to take it to the loan account, I'm going to take it to the interest on loan account. So interest on loan is also an owner's equity, but it's a negative owner's equity. Therefore, I can anticipate that it's going to have an entry on the negative side of owner's equity, in other words, the debit side. So let's see. If I put the 1,000 Rand in, where else will I take it to? Which other account? So what's the contra account, in other words? Remember, the money needs to leave my bank account. So my contra would be bank through the CPJ. September 1st, we withdrew 20,000 out of the fixed deposit account. And I'm also going to do October 1st as well. We paid in installment of 8,000 on the loan. So firstly, my fixed deposit account now needs to decrease with the value of 20,000. When I withdrew it, where did that money go? Remember, withdrawing means I take it out of the fixed deposit, but I put it into my normal bank account again. So I put it back in the normal bank account through the CRJ. Then this account is now balancing on 30,000. So my fixed deposit that I've got after the 1st of September is only to the value of 30,000 Rand. Then for the loan, on the 1st of October, I've paid the installment of 8,000. So in other words, when I paid, the money left my bank account and I used the CPJ to record it. So now the 20,000 loan decreased to a 12,000 Rand loan. So my balance in my loan account is only 12,000 Rand. February 28th, received the outstanding interest for the year on the fixed deposit. So the last interest was paid there on the 1st of June. So now from the 1st of June all the way till the end of the year, I still need to get the rest of my interest. So that gives you 9 months worth of interest that I'm waiting for. Now remember, there was a change in my amount that I've got invested there on the 1st of September. So on the 1st of September, I took out 20,000. So from there onwards, I only had an investment of 50 minus 20 gives you 30,000 Rand. So for the first, out of these 9 months, for the first 3 months, I earn interest on 50,000. And then for the last 6 months, I will earn interest on 30,000 Rand only. So when I do my calculation, I need to show that. So from the 1st of June to the 1st of September, I had 50,000 invested. But then from the 1st of September to the 28th of February, I only had 30,000 invested. Now, for both of those, my interest rate stayed unchanged at 10%. So from the 1st of June to the 1st of September, that gives you 3 months. So I calculated on 3 over 12, and that gives you a total of 1,250. Then from the 1st of September to the 28th of February, that gives you a total of 6 months. So in total, I earned 1,500 interest. Therefore, I add it together and I see my total interest for that 9 months is 2,750. Remember, because the amount changed, my investment amount changed, I need to show it as 2 separate entries and then add it together to get me a total here. So in my interest account, I can only write in the total of 2,750. Where is this money going to come from? It's going to, through the CRJ, it's going to come into the account, into my bank account, so that I can show that I've earned my interest. So in total, how much interest did I earn? A total of 4,000 Rand. So our last bit, the interest rate on the loan increased on the 1st of January to 16%. Issue a check for the remaining interest for the year on the loan. So the last time I paid interest was here on the 30th of August. So in other words, from the 30th of August, I need to still pay interest. That gives you September, October, November, December, January and February. That gives you 6 months in total that interest is due. But now keep track, because for some of the 6 months, for the first month, I had a total of 20,000 Rand loan. Then after that, my loan decreased to 12,000. And it was 12,000 at 15% until the 1st of January. So that gives you 3 months. But then from the 1st of January, it was still 12,000, but now it changed to 16% interest rate for the last 2 months. So a lot to consider when I'm doing this calculation. 3 things, or 3 different calculations. From the 1st of September to the 1st of October, I had 20,000 Rand loan, 15% interest, so for 1 month I had to pay 250 Rand interest. Then from the 1st of October to the 31st of December, my loan decreased to 12,000 at 15% interest rate, and that's 3 months, total of 450 Rand that I have to pay on the interest. Then from the 1st of January to the 28th of February, I'm still on 12,000 loan, but now my interest rate increased to 16% for the last 2 months. So that gives you a total of 320 Rand that you need to pay. So in total, I owe 1,020 Rand interest. So I'm going to go and pay that. 1,020 is leaving my interest on loan account. It's an expense that I'm creating. So that expense or that money will be paid out of my bank account. Therefore, I use bank as my contra detail. So in total for this year, how much interest did I actually pay? 2,020 Rand. And then you're done with this question. Well done.